I may have figured out a strategy that is golden, and I mean like pure gold. And of course, I'm gonna show it to you guys. And this, I promise, will 10x your learning curve and help you become 10 times more profitable by the time you are done watching this video. If you guys do not know who I am, my name is Colt Mosdef, and if you want to be mentored by me one-on-one and learn from my 9 years of experience, I'm looking for 10 people that I can guide towards $10,000 a month using my exact strategy. If you're open-minded, you can click the link below to book a call with me, or you can send me a message on my Instagram where there is a link in the description. Now without further ado, let's get into my computer and let's make some money. Welcome to my computer, ladies and gentlemen. The first thing that I want to go over before we dive into this is this strategy is based around US 30, or I should say it's meant for US 30, NAS 100, or the S&P 500. Those are the three indices that we are focused on. So the first thing that you guys want to do is go to your watch list and add those to your watch list. If you go to all, type in US 30, and you want to add US 30 Owanda right here, type in NAS 100, add NAS 100 Owanda, and then the SPX 500 Owanda right here. Once you have those on your watch list, you can navigate through them. We have US 30, the Dow Jones, NAS 100, the NASDAQ, and SPX 500, the S&P 500. For this video, we are going to actually focus on US 30 because US 30 is the mothership of indices. So whatever US 30 is doing, most all the indices are going to follow US 30. Now the next thing that we need to do is you guys need to go to this indicators tab right here and type in Lux Algo space fair value gap. We're going to get this first one right here. Once you add that to your chart, you guys can see that we have all these boxes appear. Now let me explain to you what a fair value gap is. A fair value gap is an imbalance in the market where price is usually retraded to. So you can see today we had this imbalance form on this fair value gap right here, this red shaded area. Price formed a fair value gap, came back into that fair value gap, and look at how price hit it perfectly to a T and then pushed away to form a new lower low. And we have this lower high and a new lower low. So that's overall what we are going to be using to find our entries. Now with this fair value gap, there's multiple ways of looking at it. I like to zoom in, and I'm going to be very clear with you guys here. So this is a great depiction of a fair value gap. Sometimes with our fair value gaps, price will make this fair value gap, but it won't retrade back into it. So this is a nice depiction of a fair value gap. So we have three parts of the fair value gap. We have the top part right here, then we have the bottom part, and if I grab my Fibonacci's and I go from the high to low, we actually can find the 50% level right here. So there's three ways of entering on a fair value gap. You can enter when price goes and hits this bottom part like it did right here, or when it hits the 50% level, the halfway point on the fair value gap, or when it hits the top. Usually when I'm looking to enter on a fair value gap, I want to get in when it hits the first part of the fair value gap or the middle part. So ideally, if you were to have taken a trade right here, you could have sold when price hit this fair value gap right here. And then when it hit the halfway point of the fair value gap, you could have also entered another sell. Now when we are entering into a fair value gap, this is really easy. A fair value gap consists of three candles. We have this candle, and we have the actual candle that forms the gap, and then we have this candle right here. So usually if I'm going into a trade, let's say that I'm going into a sell right here, I'm like, guys, it's gonna be a great sell. Usually my stop loss is going to be above the first candle. Let me get my cursor right here. Usually my stop loss is going to be right above this candle if I'm looking to take a sell. And then for my take profit, I'm usually aiming for previous support or resistance, or previous lows or highs, I should say. So we have this wick right here that we could have aimed for, and we have lows all the way down here, but that's a really big stretch. You can see our risk reward ratio is like 10 to 6. So usually when I'm going into a trade, I'm just going for like 2 to 1. That's what I usually look for. So we can see on this trade, if we were to have taken a sell right here, stops 497 pips or 49 points, TP 1672 pips or 167 points. So this is a 3.36 risk to reward ratio, meaning that our take profit is 3 times the size of our stop loss. And that's what we want to see when we are looking for this setup. The next part is important. We're going to go and get this vertical line. And I want you guys to use this on the minute 15 or the minute 5. And we're going to look at both. We're going to be looking between the times of 10 a.m. This is an EST. So 10 a.m. to 11 a.m. Right in this hour window is when you want to be looking for a fair value gap to be formed. In our setup, for price to go and hit that fair value gap doesn't need to occur within that time frame. We just want to see our fair value gap really be formed within that time frame. So we could see price came down, formed our fair value gap. About 15 minutes after 11 a.m., price retraded into our fair value gap. We could execute a sell right there and price continued to go down. So overall, what I'm looking for too between this time frame is I want to ideally see like what's our overall trend. Are we in an uptrend or a downtrend? Is price breaking lows and continuing lower or breaking highs and continuing higher? So right at the market open right here, we could see price push down. We did break this low right here and then we had this high right here. So ideally before the market opened, this was our range right between these two levels right here. And then we wanted to wait 30 minutes after the market opened. 1, 2. We can see that now the candles are closing below this previous low. That means that price has a willingness to go down. Now we're in our 1 hour time frame right here. What are we going to do? We're going to start looking for price to make a fair value gap. And this once again is on the minute 15. I've noticed that the fair value gaps work the best on the minute 15, but they are applicable on every time frame. So if you're using this strategy, I would stick to either the minute 15 or the minute 5. The minute 1, a lot of fair value gaps will be being made. So you kind of want to have as few as fair value gaps as you possibly can. Then we can see, here's our fair value gap that we marked up a second ago. Look to go short right here. Stops once again above the first candle of the fair value gap. It's a 3 candle thing. TP, aim for our previous support alone, which we already did a second ago. Price mitigates back into it. Pushes away, TPs hit right here on this candle. So that's overall what we're looking for. So once you guys are done with this video, I suggest that you guys go mark up these times on US 30 on the minute 15. Then you can go to the minute 5. So that's what we're actually going to do now is let's go to the minute 5 time frame and let's go look at previous days to see that fair value gap being formed. And I already see it right here. So here's our 9:55 after this candle closes. It's 10 a.m. 9:55 to 11 a.m. right here. So what do we see right here? If we click this replay button right here, we can see we have a fair value gap formed right here. So ideally, we could see 5 minutes after 11 a.m. or 10 a.m. what happens? We see that fair value gap formed. And you guys need to be really like watching the markets when you're looking for your setup between this time frame. So if you can dedicate just 1 hour a day to trading, that would be perfect. Monday, Tuesday, Thursday, and Friday are the days that I'd recommend that you trade. So we could say, do you know what? We're going to go long right here. Stops where? Below the first candle in the fair value gap. TP, we're going to look for previous highs. So we are on the 5 minute. It's hard to define where previous highs are. And actually, we are at all-time highs. So the way that I determine where I'm going to put my take profit, this is like the biggest trading hack that I figured out on my own. If I can't define where my next take profit is going to be because I don't have previous market structure, I literally get my fibs from the range that I'm in or the fair value gap range. So 1, 2, 3, 3 candles. So I'll find the low of the range right here. Then I'll get the high of the range right here. This is for an uptrend. And I'm simply going to drag my take profit to my negative 0.50. So if I get my fibs, you guys can copy my settings, take a screenshot right now, and then also make sure you take a screenshot and add this level in too, and also take a screenshot right now. After you do that, your fibs should look identical to mine. So now we have our setup right here. Then we're waiting for price to come back in that fair value gap. And also with the fair value gap, remember, so we don't need this anymore, the fibs. We can find the actual 50% level within the fair value gap too. We can go from the high of the fair value gap to the low. 50% levels right here. Delete the fibs. So now we could honestly have 2 entries, one right there, and then we could have another position. Let's move this in even more. Then we could have another position right here. Same stop loss and same TP. We just have 2 different positions. So let's play it back. So price barely comes and hits that fair value gap again. Right in here it hits it. So once it hits that, we're going to be buying. Then price moves away. So our second position, scratch that, it didn't get hit. Now this is our only position right here. Boom, goes and hits our TP within what? 1 hour time. That is how you do it. And yeah, sometimes our trade isn't going to have a 2-to-1 risk to reward ratio. That is fine. Usually it might be a 1-to-1, but I'm telling you guys with this strategy, it's like 90% accurate. When you see these fair value gaps and you see that time window appear from 10 a.m. to 11 a.m., you are going to see a really nice reaction away from that fair value gap. So if I were you guys, I would go and apply what I just taught you guys in this video. Go look from 10 a.m. to 11 a.m. on your time frames. Check US 30, NAS 100, S&P 500, check the 15-minute, 5-minute, and test that for like a couple hours. See which pair that you find the most accuracy with and you like the most, and then start trying this on a demo account for a couple weeks and see if it works for you. Let me know what you guys think in the comments. Also, if you want to be one of my top people to take to $10,000 a month, make sure you book a call with me on the link in the description. Without further ado, guys, peace out.